Good morning, Innovate. Today we are here with April Jordan at Carolina Property Insurance. And April has graciously agreed to come on and let you guys know what insurance means for your clients, right? So there's lots of different types of insurance out there that you as an agent need to be aware of and how to advise your clients when they're looking at different specific properties. So April, why don't you go ahead and kick us off and kind of tell us a little bit about Carolina Property Insurance and your team there, and then, walk us through what we should be asking and what we should be looking at as agents.
Great. So we're just here to make your job as easy as it can and to get you to the closing table, the easiest it can be, and get you to the closing table. Carolina Property Insurance is a company that offers your clients insurance products to help you and them get to the closing table when they purchase new properties. We've been in the business about 3 years. We have a new business team that's dedicated only to new clients, and then we also have another team, which is our customer service team, that's dedicated to servicing and taking care of our existing clients. So we are organized that way so that we can be fast, responsive, knowledgeable, and try to offer your clients the very best service that we can. And sometimes you get into a pinch and you need to know prior to closing, if you've got properties that you're just not quite sure what the rate is, we can certainly assist with that in providing rates for you before you put in that offer so that your client doesn't get surprised when they're not exactly accustomed to coastal Carolina insurance rates. So that's a little bit about us, and I'd love to share with you some information about the products that you may come into contact from time to time when you are assisting a client in getting to that closing table. So I think we've got, so here's a little 101 that I put together for you guys, keeping your finger on the pulse of property insurance. This is a list of products that you may come in contact with when you are going to assist your client with purchasing that property. A lot of times we have investors that you deal with. That's the top left-hand block there, called DP3s, also known as dwelling fires. This type of insurance is to address the insurance needs that come with having a property that you're renting. So you'll see it's used to write coverage for rental properties. Some properties have contents coverage, some don't. We can tailor make that anyway to fit the needs of your client. Tenant occupied residences can be short-term or long-term. They can be 12-month leases, or they can be, a week at the beach. These products typically offer liability insurance, but it never includes flood. And that's something that you'll see throughout. One of the other products that you may have to talk to your clients about, or of course call us, but something that happens at some point is your client may be purchasing a property that is in need of some TLC. So that would fall under a vacant and renovation policy. A lot of people think you can just go ahead and purchase that homeowners or that dwelling fire policy. But if that home is truly vacant and it's going to be, renovated, or if it's going to be vacant for a while, then you need to write another policy form. And I think that that's something that a lot of realtors are not aware of. So it's very important, because if you don't write the correct coverage on that property, if they do have a loss, then there's going to be a discussion about why that claim's not covered. And we certainly don't want to put your clients in that position for sure. One of the things that you may come in contact with, and this kind of goes along with condo insurance. So you'll see the excess general liability, and that's also known as excess personal umbrella, and also condo insurance. You have some properties that, of course, need an HO6 that covers the additions and alterations of the interior of the condo unit. And then you have your HOA master policy that provides coverage for the exterior of the building. Something that you need to be aware of, and your clients need to be aware of. Sometimes you will come across properties where it says, oh, HO6 is included in the master policy. Your client does not need to purchase an additional HO6 policy. That is not something that happens on a regular basis, but it does happen from time to time, and we have been able to provide clients with information, something that you guys or they may not think of. So if you do have that HO6 coverage that's provided with the HOA, one thing that you need to realize is the liability piece is missing. And so what that means is this. HO6 is provided with the master policy. A client, just say they get cut there or they fall going into the shower, anything that is any kind of like injury that they can say, oh, well, this was not exactly the way it should be, and this caused me to have to go to the ER. If you don't have that liability piece, then they're not going to be covered for that, and that may be an out-of-pocket expense for you. So that's very important when you're thinking of a condo that has coverage under the master policy. Just keep that in mind, because that is a gap in coverage for your client. And then we'll go to HO6s. That's been certainly a topic of conversation this year. The rates are a little higher this year. Well, actually a lot higher this year than they have been in the past years. It seems like condo rates have gotten hit this year with increases that are just tremendous. We're being told that replacement cost per square footage is $65 to $80 per square feet all day long. We get this information from restoration companies and also contractors who we trust, and we reach out to make sure that we're staying up to date on what it takes to replace units. Condo insurance is not a one-size-fits-all. Your clients will be receiving quotes that may be a little bit less. We tend to try really to hone in on replacement costs, and that HO6 policy is going to cover the interior additions and alterations to that unit, and it provides liability. It doesn't provide flood. It gives loss of income. So if they're counting on the rent money that they receive to help fund the purchase of that condo, that loss of income is a very important piece for your client. So that's something that we would address with them and talk to them about. HO3 is probably the most general product that everybody knows about, or the one that everybody recognizes. That's just a homeowner's policy. Homeowners policies can be written on primary or secondary homes. So that means if they're moving here, it's their primary residence, and HO3 would be the perfect product for them. Secondary residence, if it's a beach house without rental exposure, then we would write a secondary homeowner's insurance on that. If there's any type of rental exposure, then we need to have a conversation about writing them under a dwelling fire. Homeowners does not include flood, and it also offers liability. Then flood coverage. There's been a lot of changes with flood over the last 2 years. One of the things that I just try to relay to our realtor partners is that elevation certificates are great. If you can get those, you can be a top realtor if you try to get that elevation certificate from the seller if you are representing the buyer, because FEMA will give you the better of two rates. We don't need an elevation certificate to rate flood insurance, but if we have an elevation certificate, we can provide a rate with the elevation certificate, and FEMA will give your client the better of the two rates. And I mean, we've saved someone $1,200 a year on one, and I think that was the last example that we used when I was talking to the Innovate Realtors at a quarterly breakfast. And so it's important. And if you're representing the seller, just great information to have in your MLS docs, because it makes you look like you're doing more of a thorough job if it's in existence. Just a great piece of information that everyone can have access to. It makes everyone's job a little bit easier. And then just know that if your property is in an actual flood zone, it's going to be part of their mortgage requirements. If it's not in a flood zone, we can provide a quote for that, but that would be totally left up to the preference of the buyer, whether they get that or not. We just provide them with the information. Some people take it, some people don't. But just know that if you are showing property, or if you have a property listed and it's in the flood zone, whoever purchases that property, they're going to be required to have flood insurance. Then I put a little helpful link on the bottom. Um, it's the FEMA Flood Map Service Center website. It's really easy. You can go online, type the address of the property into this portal, and then it'll tell you what flood zone that it's in. If you get stuck in a hard place, and you need that information quickly, you can certainly call us. I pull flood determinations for some of my preferred realtor partners all the time so that it can help them give that information to their clients when they're maybe out in the field or they're looking at a particular house and they've got, one or two that they're really leaning toward to put it in an offer. So that may be helpful, but we're always here to help as well. And then I think, Bree, you wanted me to talk about some of the things that can affect rate. We don't like to give averages of rates because it can be so different. And here's some of the reasons why, because I know that sounds a little confusing to realtors. You're like, why can't you just give me an average? But there's so many things that affect the rates, that the rating systems that goes into individual carriers. But some of the big things and some of the things that would help you guys when you're out in the field showing property to your clients, rate starts with the age of the home. So if you're showing a beach house that's built in 1951 and it's close to the ocean, your rate per thousand is going to be way more than a house built after 2005. Homes built 2005 are getting all the building code grades and the discounts because at that time Horry County adopted different codes, and those codes have required buildings to be built to withstand heavier wind loads. So your homes that are on the newer side, and I would say 2005 and newer, are going to get your best rate per thousand. Now sometimes you can't find that, and I understand, but this is just kind of general information to give you. The age of the roof. I know that you guys have heard this over and over again. Our carriers are trying to scale back, and we have some carriers who will not even write homes unless they have a 5-year roof, 5 years or newer. Now, that's a very slim percentage of our carriers, and we have other ones that will write, roofs 15, 20 years, so it's not a big deal. There are options out there for older roofs, but the age of the roof is very important. Hot water heater age, that's something that we're going to have to know because that determines whether someone can be placed with a carrier or another carrier. One of the things that you don't see with homes that affect rate are insurance scoring. And insurance scoring is not credit. We are not mortgage lenders. We don't pull credit. It's not going to show as a hit on their credit when they're trying to, when their lender's trying to facilitate that loan. So it's nothing to be scared of. But sometimes we do have to have insurance scoring, and that's just one of the things that we have to run by getting personal information from your client. Updates on homes also can help with rates. HVAC, roof, as I've talked about, plumbing and heating if it's an older home. Those are always important for us to know and can affect rates. And then also flood zone rates are not just whether it's in an X zone or whether you're in a deemed flood zone. It's also by location. It's also whether you've had claims experience on that house, and that goes with all insurance. Claims also runs your rate a little bit too. So if they've had a claim at another property, that's not something necessarily that you guys are going to know about, but it could affect their rate. And I think that's about it. Just a little generalization of what products that you may come across that you might need to point your clients to come to us to get. And if there's anything that we can do, to help with that, just give us a call. What I have done on this flyer, we always try to find ways of ease of doing business to make your job easier. There's a QR code that says submit your referral. So if you use this QR code, this will send you to, it'll link to a Jot form, and it's just information, client's name, address, phone number, email, your name, phone number, and email, and then it will come straight to us. We will call your client quickly and contact them and see how we can help. So we just really want to provide you guys with ways to be able to send your clients to us, ease of doing business, and of course we're going to offer them and work with them to offer them the best rate, the best coverage to take care of their needs.
Well, that's great. And I appreciate all of that information. And I just had a couple questions come to mind as you were going through that,
Sure.
that maybe you can help answer. So an insurance score, from what it says, from what it sounds like, is kind of what the consumer's insurance score is. So like if they've filed claims in the past, is that correct?
That's correct. So insurance scoring is what it requires us to have is, of course, name, date of birth, and either we can have their prior address where they've had insurance history, so their last home where they've had coverage, and then sometimes some of these carriers require social. But like I said, it is not a hard. It's not a credit score. Credit may go into that, but it also helps pull in claims and just a total insurance scoring.
Gotcha. Okay. And then I've heard this before, and so correct me if I'm wrong. So flood insurance, like if you get a homeowner's insurance policy, it obviously does not include flood. So
Correct.
that also means, and correct me if I'm wrong, like if their water heater blows up and floods their house, is that something your homeowner's insurance would cover? Or is that something that they would need to consider having a potential flood policy put in place?
That's a great question, and we get that question all the time, especially folks that move here that are not accustomed to flood insurance. Flood insurance is pretty much a national conversation now, but we do from time to time get people who've never had flood, and they ask that question. If the water comes from the interior of the home, so say you have a frozen water pipe, or your refrigerator, the water line from the refrigerator disconnects and you get water, and like you were saying, the hot water heater, explodes, or there's a leak, that's going to be covered under your HO3, and that's also covered under the dwelling fire. So whether you rent the home or whether you live in the home or it's your secondary home, that's going to be covered under the dwelling fire, the DP3s, or the HO3s. Flood is going to cover rising water from the ground up. So, and typically happens from outside of your home. So that's a great question, and that's the differentiation between the two coverages. Does that make sense?
It does. It does. So being in a coastal area, if you are anywhere close to the beach, if you are anywhere close to a body of water, whether you're in necessarily what's called an A or an AE or a really high risk flood zone, would you, as an insurance professional, recommend that they get flood coverage? Because, we haven't, knock on wood, we haven't had a really bad hurricane in this area in a while, but when we tend to have effects of hurricane go on for several days, a lot of times we get flooding. And so if flooding were to happen from that named storm or that hurricane, they would need to have that flood insurance to cover them for any rising waters that would get into the home, correct?
That is correct. This is how I feel our position is on that. I'm never going to tell anyone you don't need flood insurance. We live in coastal South Carolina. There are so many developments that have popped up, and yes, that changes the landscape and where water runs in our area. So I'm never going to tell you, no, you don't need flood. I'm never going to tell a client you absolutely have to have flood. What we like to do is we like to give you all of the information, tell you what flood zone you're in, tell you if you're near flood zones. We also recommend people to look, if they are unsure about whether they want to buy flood insurance, when you move into the home, look and see what's going on. See how close you are to retention ponds. We like to provide the rate, and then they make the decision. We can't make the decisions for our clients, but we can just really strive to be really good sources of information so that they can make an educated decision.
Yeah, absolutely. And then with that DP3 dwelling fire coverage for anybody that's coming in and buying a investment property, which we have a lot of investors that come into the area and buy rental properties. So would you also recommend for those homeowners that are buying investment properties that they really make sure that their tenants also get tenant coverage for their side of the transaction? And is that something you guys assist with as well?
Yes, and I probably should have put that on this document, and I can do that going forward. But that would be considered an HO4. A lot of times when you have a property management company that's handling your rental, they're going to require that anyway. But if you're doing the rental yourself and you've got that rental agreement just between you and that tenant, I think an HO4, also known as renter's property, would be 100% recommended, because what that does is that provides the renter or the tenant of your home with contents coverage. It provides them with loss of use in case they get displaced, because of course that's important for anybody, that they can rent another, they can rent another place to live while if something's, needing to be fixed or replaced. And then it also gives them liability. And I think the liability portion of that is super important to the person owning the home. And that's why, you would want to recommend that HO4. That's a great question, Bree.
Yeah, the reason that came up is, I mean, as you know, we used to do property management, and we had, unfortunately, we had a tenant drive into their own, drive into the house, into the garage.
Yeah.
And so we had to use, it was a combination of the homeowner's policy and the tenant's policy to get that damage taken care of. So thankfully, the management company did require that renter's insurance, and they kept up with the renewals. And that's another thing that you guys can help the homeowner with, especially if you have the homeowner's policy and the tenant's policy, because you can help notify that homeowner as a reminder when that policy is coming up for renewal for the tenant, so there's no lapses.
That's right.
Yeah, we appreciate that, because I know that you've done that for us in the past as well. Well, April, I don't want to take up all your time today, but is there anything else that you'd like to leave our agents with, other than obviously scanning that QR code to make sure that they get to you with their clients for referral? And you guys, and sorry, I just thought about this, but even when they're in the search process, I know that I've talked to Micah on your team, I've talked to you on your team. I can say, hey, Micah, April, here are the 3 houses the clients are looking at. Can you please run an estimated cost on these houses? And it's based off of the information in the MLS or whatever information we give you for those homes. And then that can actually help a consumer make a decision as far as which home to move forward on, depending on where the property is located, right?
Absolutely. And like I said, when I covered the things that affect rate, if we don't have their information, it's definitely a general quote, but it's helpful to you to get some kind of preliminary rate, or for them to just they can check that off the box, because some people are really, really, really concerned about what their rate's going to be when they move to coastal South Carolina. So I think that that's a great selling point for you guys. But you just have to keep in mind that it's going to be a very general quote if we don't talk to your client and get those other pieces of information that are specific to them.
Absolutely. And we appreciate it, because at least it helps them figure out in their mind, what's the best route to go. So,
Sure. Yep.
All right. Well, thank you, April, for being with us today. We really appreciate you, and make sure, agents, that you reach out to April and her team. You've got submit your referral QR code here. You've got their phone number right there, and option 2 for your new policies and anything new that's coming into them, so they can get you taken care of, and they are always there to assist. So thank you again, April, and we will hope to see you soon at one of our events.
Hey, Bree, I have one other thing to share with you that's really big news for us. So I know that we're getting ready to jump off, but I wanted to tell you, this is the first time that I've been able to share this, because I've been working on this piece for us for a long time, but we are now in North Carolina. Yay!
Yay!
We are licensed. We have the green light. I've already got about 7 carriers that have said, go start writing. So if you have any clients that are in North Carolina and they need insurance, we're poised to be able to help them now too. So that's the latest and greatest news for us here at Carolina Property Insurance.
That is phenomenal. So all you North Carolina agents, use that code as well. April and her team can help you. Well, thank you, April, and congratulations. And we
Thanks.
see you soon.
Bye-bye.